So this session is, as Ahmed said, revolutionising primary markets. And we've got 5 great speakers today. So what's going to happen is each of the speakers is going to present for 7 minutes. Okay, 7 minutes. After which we'll do a short Q&A. So please have your questions ready when we move to that session. So let me introduce you to our panel. We have Thilo Derenbach, Head of Business Development and Commercialisation, Issuer Services and New Digital Markets at Clearstream. Chris Jones, Head of Business Development Europe at Covalent Capital. Spencer Maclean, co-founder of BondAuction. Raja Palaniappan, CEO of Origin. And Robert Koller, CEO and founder of NowCM. So without wasting any more time, let me introduce Thilo to the stage for his 7 minutes presentation.
Thanks to ICMA for this wonderful event. It's a really, really nice chance to catch up with everyone just before Christmas. I'm sure it's not the last event for all of you, nor is it the last one for me, but it's great to see you all and to have the time to quickly present. I might take a little bit less time than the 7 minutes, because Armin and his first panel actually introduced the topic of D7, which is our digital financial market infrastructure already to a degree, but I'll spend a few minutes, apologies, nonetheless, on some of the developments around it. I'll start with this slide. Some of you might have seen it. I like to use this one because it just shows where digitization comes from, which industry has already digitized and which one has not so much. And the financial services industry is a little bit behind the curve, I think we'll all agree. Yet, we, at least, and I think most of you here in the room agree that the train is picking up speed, certainly has left the station, and we're looking at digitization from an industry scale perspective, otherwise you would not all be sitting here. That's all great. To support that transition into the digital age, we at the German Stock Exchange, Deutsche Börse Group, have developed what I call a digital financial market infrastructure platform called D7. It's a platform that is built on modern but traditional technology, so it's not a blockchain solution as such, but as you will see from my following slides, it actually delivers all of the benefits that you could also get from tokenization by digitizing a security. In essence, we're looking to create the MP3 of the music industry also for the financial industry. So digitizing a security, a traditional security, being able to create it in short notice, modify it whenever needed, share it with the world whenever we want to. So what have we done? And we mentioned a few partners, and actually I shouldn't be standing here as a first speaker because actually there are a number of colleagues, be it the BondAuction colleagues, be it the NowCM colleagues or Raja with Origin. They are actually at the pre-issuance phase and they should be speaking first, but my last name with a D forces me to speak first today. Apologies. So it's a digitization platform that we've created probably 12 months ago. Currently it operates entirely under the German law. It was mentioned earlier, the E-Securities Act, the EWPG, that has been launched in Germany, are the guardrails, the regulatory guardrails that we use. Blockchain Act 123 were mentioned earlier as well. There could be others that we could mention, but all of these regulatory environments are necessary for us as market infrastructure to actually operate and provide services to the likes of yourselves who would not pick up any of the services without the regulatory framework that is necessary. For this platform to scale, we've partnered with a number of parties. We call them digital market partners. Some of them are here in the room, be it Origin, be it Agora, Investor, Digital Assets, EY, Linklaters, White & Case, but also, I see Philippe in the room, so we're also working very closely with Allen & Overy and other parties as well to enhance and progress the transition of the financial industry into the digital age. Connecting to D7, of course, as our preference, but otherwise, of course, just supporting that transition to make sure that we reap the benefits of the potential and the framework that the regulatory regulations give us. What are the benefits of digitization and tokenization? They're measurable. We've measured them along 8,000 securities that we've already digitized on our platform. These are really just high-level views, but all of the things that I will mention or have mentioned here on the slides have been mentioned in the previous panel, on Armin, your panel earlier. It's speed of execution or speed of issuance. We can issue a security digitally within 9 minutes. to the market, investable by whoever it is on the investor side that would like to invest into that instrument. The digitalization, but equally the tokenization, will deliver benefits from an operational perspective. Operational efficiency is delivered, operational risk is reduced for the treasurer, the speed of that execution, but also the ability to create liquidity and funding for the organization within minutes or even intraday is, of course, extremely interesting, and that is what digitization can deliver. And I think one of the speakers spoke of the single source of truth. That is, of course, what we look to develop. Why? On the basis of the information received by the issuer, by the agent, directly or via the sort of pre-issuance platforms that sit here in the room today, we get instrument and event data straight from the source, from the horse's mouth, and push that out into the market. That creates that golden source, single source of truth for that instrument, that we have not been able to evidence yet, should reduce the need for reconciliation in all of your back offices as well going forward. We've not been able to evidence that purely because with 8,000 instruments that have been digitized, that's a reasonable number compared to other things that have been tokenized, but it's still it's a drop in the ocean compared to the entire issuance market that we have. Where are we going from here with our platform? Quickly just recapping, this still says 7,000, but we add 1,000 ISIN codes digitally on a weekly basis now to our platform, so that number is already outdated. We've created instruments worth over 3.5 billion euros on our platform, but again, I need to emphasize it's digitization, not tokenization, and it's a process of issuance, not the end-to-end process yet, but still it is an important step towards that transition into the age, plus it is delivering the effects that we were mentioning earlier. For us, the next steps, and this is what that curve is trying to display, for us the next step is to complete the German journey, so to say, to complete the product range for the German market. Secondly, to extend into the Luxembourgish ecosystem, leveraging Blockchain Act, but also then moving into the international markets. And of course, then complementing the digitization platform with a true tokenization platform. So you can expect to see in the first half of next year a true security tokenization platform where the security is tokenized from the issuance process down to the investment possibility by the parties that want to do that for direct issuance of a commercial paper, which will be our MVP. So nothing awkward or quirky, true tokenization for issuance and distribution into the market of a commercial paper, but also interestingly, we heard earlier, for investment funds and ETFs. And I'd like to perhaps thank some of the parties that are here, if you have 30 seconds, who've supported us on this journey already. I mentioned the market partners that work with us, but I'd also like to thank the banks and the issuers and the agents that work with us already today to create those sorts of numbers on a digital, from a digital perspective. Some of the names are mentioned here, others did not want to be mentioned, but you can assume that with 1,000 securities being issued on a weekly basis, there are other names that are here to support us from a structured product perspective, debt capital markets perspective, and in the future, once it's possible, at least under the German law, if that's a pointer, also for equities, but also the cash on chain element that we would add next year. I'll stop here. Thank you very much. It was a pleasure.
My name is Chris Jones. I represent Covalent Capital. We're a DCM Focus Fintech, which is incorporated and headquartered in Singapore. I believe that we're the only institution present that has an Asian base rather than a European base. A lot of information on this slide. Don't worry, I'm not going to talk through all of it. I'll trust you to read while I'm talking. But historically speaking, the company was incorporated in 2017. Our product was launched in 2018. And we can count over 2,000 users as subscribers to our product. That's representing over 400, in fact 415 individual institutions. So while we're certainly a fintech, I wouldn't necessarily put us in the same boat as a startup as many of the other institutions that you may be familiar in dealing with. We have a well-established product that we've been pushing in front of clients now for 5 or 6 years or so. Now, I first came across Covalent when I was still working on the sell side, HSBC, back in 2018. I was very much impressed by the product, the vision, and the founders themselves, but I thought I could bring something to bear as well with my experience of 25 years in capital markets. So I joined the company last year to head up their efforts in Europe, with the focus on tweaking the product for the European audience, and then pushing that product to clients in this part of the world. I'll decomplex the previous slide and just focus on the products that I'd like to discuss here today. So these are just really the blue boxes that you can see highlighted both under data and execution. So first of all, the entry-level product that we have, it's a primary market data service. We receive a variety of new issue runs from the sell side, from market infrastructure providers, any source that we can. We use a machine learning algorithm to convert that unstructured data into structured data that can then be used by ourselves or our clients or any third-party systems and platforms. This also includes any of the evolving terms rather than just the hard fields you'll see in other market data sources. And we also include a library of offering documentation for current and historical deals as well. Beyond that is Nucleus. This is our data analytics product. So this allows our clients to slice and dice the data that we have on our platform in any way that they may find useful. We allow the users to perform logical operations on this data set. So you could choose 2 banks which have to be on this deal and exclude a deal set which has bank C on the deal, or have a list of any of the banks that would be on the product, for example. We have a standardized palette of charts, of tables, etc., which our users can visualize the data, or alternatively, they can export the data via a CSV or Excel file, or consume the data via an API. Moving on to the execution side, before I come back to the investor analytics, thinking in the timeline of a transaction, we have Roadshow Manager in the first instance. I think this is a core product, and we find that the roadshow phase of a transaction is extremely important, and particularly for inaugural borrowers or borrowers issuing a new product, but it's extraordinarily human time intensive. So what we do is you have a holistic environment, a holistic collaborative environment where our clients can all participate and look at a single source of truth for the marketing phase of a transaction. We have the ability for the sell side to solicit feedback from the buy side, and the buy side to enter that feedback themselves. It's also digitizing the feedback process as well as just the structured data comprising the transaction. And of course, what primary market solution could exist without a book building solution? So as you see in the statistic here on the right-hand side, although we're something of a new kid on the block, we already can comprise from 0 back in 2017. We already constitute 13% of deals book built in the Asian markets. We hope to be able to replicate this success in Europe as well. Our advanced online order book includes some advanced features, such as the ability to wind the clock back to a previous book state in the transaction. You can see the changes that occurred. So if you want to visualize this, think of yourself like Tom Cruise in Minority Report, changing reality in front of you. Or the ability to more advanced things such as algorithmic allocations. If I come back to Proton, this is our investor analytics feature. So if you have a deal that flows through the platform, investors touch it in one of a number of different ways, may have participated in the roadshow, may have provided feedback, may have contributed orders on the transaction that hopefully would have also been allocated. There's a number of different touch points here that we can then allow our clients to form predictive analytics. So historical order books no longer become stale historic data. Now this is a data mine which our clients can then utilize to generate new trade activities. Who are my biggest buyers of Euro 81? What would an order book look like for the next Swedish covered bond I would likely to bring to market, for example? So hopefully we can allow you to do more intelligent things with the data that you have and of course own. This slide here is just a very brief session just to talk about how the product can be visualized. We have a number of different access solutions. We have a web desktop, of course. We have a mobile app, and if you prefer, there's the web browser. We also support the live pricing of every bond that's come through our platform and have benchmark market data, whether it's swaps, FX, benchmark bonds, etc. We keep our clients up to date by the push notifications to the mobile app, desktop widget notifications as well as outbound emails that bring our users to the platform. One consistent piece of feedback that we have is that our platform is the first to notify any market participant. We're quicker than salespeople. In many instances, we're quicker than the standard 3-go, 1-go process, as normally there's several human links in the chain that distribute that information. And of course, we recall all of our evolved fields as well. So not just the hard shell that you typically see in Bloomberg, but you're able to source the distribution statistics, your book updates for any historical deal that's come through our platform as well. On my last meaningful slide, thank you, Keith. I see the prompt coming. What I wanted to do here is just give you an idea of all the different phases of the transaction that we would be involved in. Our tagline is that we're involved in every phase of the transaction, from mandate through to allocations, and here I've broken that down for you. So first of all, the announcement. A deal is broadcast to the market via the platform. It's published directly to all of your clients on the buy side that are on the platform, as well as any sell side firms that are subscribing as well. So you're beginning the process of the engagement with the buy side. Then that progresses to the roadshow itself. We have a logistics solution that allows you to stream that interaction by connecting every participant from the deal team, the salesperson, the buy side themselves, analyst and portfolio manager, and what have you. We have an execution platform that allows for book-built deals, auction. We have a money market marketplace that is just in the process of going live in Asia, as well as we're the only vendor that provides a direct access solution to China's onshore bond market, the CIBM, a direct connection for any offshore investor into that market. Post-trade, we can offer automated ticketing and connection to a variety of CSDs. But my final message, what I really want to dwell on, is the fact that all of this is essentially constituting a data set that you can then do smarter things with. The previous panelist from the FCA talking about, first of all, you need data for you to be able to use artificial intelligence. We structure that data, we can provide that back to you. So seamless data integration, seamless data transfer from left to right. And then, of course, by providing this data in structured format, we can provide you with analytical tools that can then help you drive trade ideas, whether it's synthesizing prospective order books or using the investor predictive analytics that I mentioned earlier on. And as a special one-time offer only, if you'd like to try out the product for yourself, then either you can scan the QR code on the screen. It's on the lock screen of my mobile device, or I've got some bits of paper that you can scan as well if you're a bit old school, you'd like to give the product a trial. But hopefully that's give you an idea of what the product's all about, and hopefully enjoy the rest of the session. Thank you very much.
Hi everyone, I'm Spencer Maclean, one of the founders of BondAuction. Peter and Andy, my fellow co-founders, are over there today. I'm glad to see there's lots of familiar faces in the audience, but also plenty of you that I've yet to meet, so I look forward to meeting you. So what is BondAuction? Well, BondAuction is an auction platform for the primary debt capital markets. It allows investors to directly submit bids for public transactions. Issuers and underwriters see a book that reflects the true appetite of the market, allowing them to make an informed decision when setting deal terms. The best bids are rewarded with a full allotment whilst using a common reoffer price for the deal. The platform works alongside the existing underwriters. They continue to offer advice to the issuers and face investors for all billing and delivery. We are bringing positive disruption to the process. We are not looking to disintermediate the banks. So the bidding and the allotments are accessible through a number of means. You can come in directly through the BondAuction web UI. It's via the fully featured BondAuction API from FDC3 compliance systems, or indeed from some of the partners in the room, such as we have LiquidNet for bidding and allotments, and NowCM for issue setup direct from the deal documentation flow. Integrations with additional OMS, EMS, trading screens, etc. will follow. So an auction addresses the problems that are commonly faced in the primary debt capital markets. First, the opaqueness of allocation outcomes. Bids in BondAuction are allotted on a best price basis. Investors can get what they want at a price that makes sense. Issuers see true market appetite for the first time. Only an auction offers the guarantee of a full allotment to the investor. An auction removes the risk of over or under allotments, and one common price is paid by all investors. Secondly, it addresses the inefficiency and the risk of the book building process. It stops the repetitive, iterative process, addresses the inefficient use of the sales teams, and the price guidance is closer to the final outcome. Deal timings are communicated at the announcement. There's no more sudden book closures. The B&D counterpart is also selected up front, reducing ticketing errors on both sides. Available hedges can also be selected with bids. So our team here has extensive experience and expertise in the primary debt capital markets and the transformational and disruptive technology solutions. So our approach from day one has been to focus on the deal execution problems that exist in primary. We firmly believe the only way to achieve this is to be collaborative and work with other solution providers. We recognise that both the buy side and the sell side have preferred systems and processes, so we have built solutions with suggested partners and will continue to build partnerships with other solution providers in a manner that has not been done in the past. We've chosen to seek authorisation from both the FCA in the UK, thanks Helen, and to the AFM in the Netherlands. The FCA authorisation is in place, with the AFM to follow. Our system is complete and it is fully tested. We have a number of integrations and partners that are already established. And we firmly believe there is strength in our focus on the execution phase of a trade. We leave the pre- and post-trade processes to others. So with our open and collaborative approach, we will continue to add partners and integrations, providing a seamless experience for all market participants. And we're proud to say that our platform has won plaudits and awards from across the market. So in conclusion, we firmly believe that the BondAuction platforms offers benefits to all market users. Issuers are signed up to use our platform. The transparency and the efficiency of BondAuction appeals to them. Underwriting banks are onboarding the platform to service the needs of their clients. They are also keen to free up Salesforce time, speed execution, and reduce errors. Buy-side investors have begun to register, and we look forward to seeing more of you on the platform soon. Thank you.
We started Origin over 8 years ago, and at the time, we were alone in pitching the vision that technology could transform the capital markets. Now, it's fantastic to see how far we've come since then, especially looking at the room today. But as we've seen from the earlier panel, the question still remains. When are we going to move from proof of concepts and LinkedIn announcements, and when is this actually going to change the way we do business on a day-to-day basis? Now, I'm here to tell you that because of Origin, the answer is today. In the first 11 months of this year, we've processed 137 transactions, helping borrowers raise over $26 billion. That's double what we did last year, which was double again what we did the year before that. We worked with over 10 different investment banks, who in turn raised money for over 60 different borrowers gathered from around the world, including FIG, SSA, and corporate issuers. We issued bonds in 12 different currencies, a variety of structures, and ranging in size from small $5 million private placements all the way up to large, nearly €2 billion syndicated benchmark transactions. And that doesn't even include the over 800 retail structured notes that we processed with our structured notes module. So, how do we do it? We were the first organization to identify the fundamental problem facing our industry, which is document automation and structured data. Now, no matter what your vision is for the future of capital markets, you need to solve the structured data problem. And we've heard this already time and time again this morning. Even if you believe that the future is going to be built on DLT and powered by smart contracts that are funded by CBDCs or stablecoins, you still need to produce documents that you can take to court if necessary, and you still need to get the data out of those documents and into your smart contract. Now, I was recently having a conversation with one of the participants of one of this year's high-profile digital bond transactions, and they admitted to me that, yes, they did the transaction and issued it and settled it T+0, but the only way they were able to do that was the documents were done 2 days ahead of time. Now, if you ask me, that's cheating. The single biggest bottleneck between trade date and settlement date is documentation. We've been focused on the document automation problem for over 7 years now. And in that time, we've been focused on 2 specific goals. The first is creating a superior user experience for people who are using the application to create the documents. And the second is to build the largest ecosystem of integrations to make use of the structured data that we create. Let's take a look at both of those in turn. So how do you create a superior user experience? There's only one way: client feedback and iteration. As I said, we've been building our documentation product since 2017, when we first started building a term sheet generator. In 2018, we expanded support to include the production of final terms and post-trade documents, and we started doing our first test transactions across the tool. In 2019, 4 years ago, we did our very first live transaction across the tool. Now, based on the feedback from those test trades and the live trade, in 2020, we decided to rebuild the entire platform from the ground up. And then late in 2020, we soft launched the rebuilt tool to a group of 30 institutions, a mix of dealers and issuers. In 2021, we launched this product live to the market, and since then, we've been expanding support to a variety of extensions, including instant ISIN, structured notes, and recently syndicated transactions. Now, importantly, in that time, we've completed over 1,000 test and live trades with real clients. Every single one of those transactions has given us valuable feedback and allowed us to continuously improve the product to create what we have today. The best products are built on the shoulders of a robust feedback loop with lots of client usage, lots of feedback, and continuous improvement. And we're fortunate to have one of the widest client footprints in the market. Let's look at the second thing, integrations. The structured data that we create is only valuable if you can do something useful with it. We built our first integration with the Luxembourg Stock Exchange in 2020. Since then, we've built integrations with the London Stock Exchange, with 3 of the largest paying agents in the market, so Deutsche, Bank of New York, and HSBC, and with Clearstream. Thank you, Thilo. And this is both Clearstream's legacy CSD at CBL, Clearstream Banking Luxembourg, as well as their new digital CSD D7. In addition, we're working with customers to integrate the structured data from Origin into their internal booking systems, as well as working with market data providers, such as Bloomberg, so that securities can be created within their reference database. So what does this mean? When you create a term sheet on the Origin platform, you can press a button, instantly generate an ISIN that comes from Clearstream. You press another button, instantly create the security in the Bloomberg database. Then when you create the final terms on the platform, you press a button, you can instantly send the signed final terms and the data to your paying agent, press another button, and instantly send it to your exchange. This is true STP. Now, there's no better way for me to illustrate the evolution of our platform than to showcase the evolution of one of our favorite customers. In 2020, Volvo joined the Origin marketplace to better connect with their dealer counterparts. And in 2021, they dipped their toe to do one of these quote-unquote friends and family transactions by issuing a 300 million euro private placement across our tool. Earlier this year, they decided to step it up a notch. And in May, they completed a 1 billion euro 2-tranche benchmark transaction, which was the first truly syndicated transaction that we've completed across our platform. This involved 4 different dealers and 2 external counsels, dealer counsel and issuer counsel, as well as the issuer as well. So 27 users were collaborating on our tool for this transaction. That was a success, so they followed it up a few months later with a 700 million euro benchmark in August, and then again in October with an 8 billion SEK 4-tranche deal. Now, we're proud that a client such as Volvo would trust our platform not just to do 1 or 2 POC transactions, but to issue in multiple currencies and multiple formats, including some of the most complicated. So if you're asking yourself, when is technology going to change DCM? It already has. Thank you.
Good afternoon. Thank you very much for being here, for spending your time with us. Thank you for ICMA for having us and to Keys for moderating. My name is Robert Koller. I'm the CEO and founder of NowCM, which the astute of you will have figured out stands for Now Capital Markets. And I'm a lawyer by training. I've been dealing with automation, data models for decades. I have built my first automation of fund prospectuses in 2008, the first data model 2011, and we've been working on this since then. I wanted to dive into the deepness of DORA regulation and MiCA, but then my colleagues reminded me even though this is super relevant for market infrastructures, especially in the primary markets, maybe my enthusiasm for regulatory issues is not as widespread as I might consider. So I will spare you this deep dive, and I will also spare you another pitch and another year in review. I think you had already a few of those, and you will have a lot of year in reviews during the months of December. I could, of course, tell you that our data model has been built on more than 5,000 variables, that we've been issuing with more than 40 issues constantly on our marketplace, which is actually regulated on our issuance weekly, where we are an issuer ourselves. Billions of trades in terms of amount, but also in terms of numbers, that we are a SWIFT member, and just by being fully regulated, this is possible, and this alone gives us 11,000 direct connections to banks, CSDs and others, that we're GDPR compliant, MiFID compliant, ISO compliant, but I will not bore you with all of this. Looking around, I see a lot of partners, clients, and friends of our platform who already know this. Even if you have not heard from us, you can see the website address there and get informed, or you can see one of my colleagues in the hoodies or somewhere undercover to get more information about this. There's also lots of online stuff about us. I want to take you on a journey about Christmas. It's this time of the year, as you know. And for this, I would like to start with one question to you. Who has already done their Christmas shopping? Show your hands. Okay, wow, mama. I thought there's a lot of Germans here, but let's do the test to the contrary. Who is more like me, who leaves it for later due to work or other reasons, or even for last minute? Please show your hands. Okay, there's a majority which is undecided, but it makes me feel bad. I'm not the only Austrian here who leaves it for the last minute. It seems we're all relying on Saint Amazon, which is an amazing logistics company. You order it, and 2 hours later, it's in the front door, even if it's the 24th of December, and it avoids you and me becoming the Grinch because you forgot to buy the presents. But how is it possible that in the physical world we can deliver things in 2 hours, but in capital markets we're still struggling? If I'm, let's say, corporate treasurer, any treasurer for this purpose, why do I need to wait days, weeks, or even months to get the money on my account? Well, the answer is you don't. As I just said, it works. The reason why Amazon can do it is they have built an amazing logistics chain, which is an orchestrated ballet of many, many players that makes this possible. But the question we should really ask us is, has this been built for its own sake? Did Amazon go out and build the logistics chain? Jeff Bezos saying, today I'm going to build a logistics chain that can do 2-hour delivery? No. Clearly no. They have decided to be the everything store and to have a purpose. So the purpose is actually what drives the logistics and what we've heard about all the technology that is now coming up. But what is the purpose in capital markets? The purpose is we want to grow the market by lowering the entry barriers, by bringing in more issues, growing the pie for everyone, and we want to make a better price discovery, have more data points, all this data that is trapped in PDFs. So at the moment, you can see people dealing with 100, 200, or like Nivura, which we bought this year, 450 variables. All of this doesn't give you the information that you need and doesn't make you future-proof. And that applies to any market infrastructure, so also to capital markets and primary capital markets. We don't automate and digitalize just for the sake of it. And that leads me to another topic, which is trust. Why do we trust someone like Amazon with the happiness of our kids? That's quite heavy, no? It's a big decision, unless you're German. you do it 4 weeks earlier or before that. We trust them because we know it works, and we know it works not because we tried it out. That's not a very scientific proof or method. We know that it was built over years. We know that it was built by an experienced team, and we know that it was certified by a gazillion labels and ISO standards and others. And it was built for a purpose, and it's independent. It's not owned by some interests. They just provide a service to whom needs it. So to wrap up, I think I need to get to a conclusion here. And the conclusion is here: if you entrust your kid's Christmas present to someone, or almost as important, the funding of your company or your country or your institution to someone else, you just assume that these pipes work. And these pipes do work, but they also lead to a higher purpose, as we said. So changing a little bit the comparison, if you were to go from A to B, would you jump into a flying car that was built by some amateur in the backyard and try it out to go from A to B? Or would you go to the places like Airbus, Boeing, Embraer, where you know that there's millions of hours of testing, that they have the best engineers, that they have IT that is suitable for the now and for the future, like that have been certified by aviation authorities and are fully regulated, and that are also built for adverse weather. I mean, it's all good if you have a self-driving Tesla that works with sunshine, but if it snows, like yesterday in Munich, you can't use it. So this is really what is important, and where you should do your due diligence and where you should make your decisions. The answer, as I said, is obvious. This is the philosophy we are following at NowCM. We want to give you trust, we don't cut corners, and we provide you with a working platform. We have some drinks later after this event tonight, so if you're not building flying cars in your backyard, please feel free to reach out, and we'd like to show you some more things into how the future of capital markets would look like. And I'm only left to say thank you very much, and don't forget to buy your Christmas present.
If I can ask, the session was called Revolutionising Primary Markets. Is that an overstatement? Open question to the panel.
I think we'd all like to see a revolution. I think we're all demonstrating how we are pulling together as well as one to try and drive that revolution. I think we come across a major stumbling block to the revolution, which is the dreaded onboarding process. And it hits a number of obstacles. There's the internal costs that are thrown around to the business end of the desks. There's the experience and the trauma that I think some people have been put through in the past, and therefore losing the desire to do it. And it's a real shame, because it seems that some of these processes are killing what should be a revolution, and I don't know. I'll leave it to the rest of the guys.
Yeah. When we talk about DLT and blockchain, which is celebrating its 15th birthday this year, we were all expecting a revolution. People told us that DLT would be eating your lunch, my breakfast, your dinner, and in the end it didn't. We're still here, and we're rightfully here. So from my perspective, it's not a revolution, it's an evolution. We're all sitting here to transition into that digital and tokenization age, which is fantastic, but it's going to be a painfully slow development, even though when we look back in 2 or 3 years' time or 5 years' time, we'll say, wow, what has happened in this period of time. But I think the important message from my perspective would be in this regard: there's been a sobering realization by the market that tokenization or blockchain technology is not the all-singing or the hottest thing since sliced bread. Thank you. But it is something that has its worth, and it will prove its worth, hence why we're also going to that direction, but it's not going to be as quickly as we think, so not a revolution, but an evolution.
Thanks. Anyone else? Feel free.
Yeah, I think maybe just one observation for me. I think, over our journey, we've noticed that it's very easy to get excited by the prospect of a new technology and sort of think about what the world could look like. And that's really important to have that excitement and motivation and enthusiasm. But real progress gets made when you actually reverse the tables. And rather than looking at the technology, you look at the user problems. And this sounds easy to say, but unless you've actually been building technology for a while, it's actually very hard to do, because people get excited by technology and they focus on the technology, but focusing on user problems is much more mundane. It's not as sexy and as exciting. But by focusing on user problems, that's where you actually find what we would call in our world product market fit, right? So by focusing on the user problems, you can actually go to each user. So the issuers that we saw on the panel earlier, the investors that we saw on the panel, dealers, and not just front office bankers, but their middle office colleagues, their legal colleagues. And you go to each individual user and say, what's your problem? So when there's a bond issuance, what is the thing that really frustrates you the most about this process? And then you start to paint a picture of what are the problems that need to be solved? And then you can figure out, well, what's the best technology to use to solve those problems? And I think as an industry, we're finally getting to sort of that stage where we're correctly identifying the user problems that need to be solved, and we're building the tooling to solve those problems.
Okay, thanks. Chris?
Yeah, I would also add that I think that there's a lot of high-profile proof of concept trades in the digital asset space. People, they're easy to criticize, but they're research and development exercises. It's a bit like trying to build a plane mid-flight. Meanwhile, the issues that we're really dealing with at the operating level are simple things like standard bond data taxonomy. Raja and Origin have tackled this with Airbrush, ICMA themselves doing with the working group on bond data taxonomy. Everyone's trying to figure out how to build the runway where this plane's going to land, right? So I think that there's a lot of unsexy stuff that's going on that is really fundamental to the future success of where all these projects are going to land.
Yeah, I mean, as an Austrian, and then just having watched the movie Napoleon, I'm not so excited about revolutions. They tend to be bloody, and I like to keep my head on. But what we're seeing is big changes coming. So this is a high-speed train. We're issuing 7 trillion just in the Eurozone alone. You cannot just stop it and change it. So what we need to focus is things that work now, implement them, and change it step by step. So I think, Raja, you can tell a tale. I mean, I think when you started, you started with disintermediation. We all learned that this is not a good way. So this big revolutions, changing everything at once, is something that needs slower pace and needs to work with the existing environment and market infrastructure. It needs to be built into, and with this we can then change it from the inside. But the changes that are coming, what I always say, the real-time revolution is really there, and that is a revolution if you look at it over time. Because for 3,000 years we have been representing everything either on stone tables or paper or PDFs, and this is now coming to an end for the first time, which is really exciting.
Okay, thanks. Anyone thought of a question yet? No, you're very quiet this morning or this afternoon. Okay, let me put another question to you all, if I may. Perhaps you can keep your answers brief. Now, you spoke about your own platforms and experiences over the course of this year. As you look back on this year, and thank you for pointing out it's Christmas, Robert, you've just reminded me I need to get moving. What would you say are the biggest takeaways from the evolution of primary markets? We'll call it automation, digitalisation. What do you look back on as being big moves? Not necessarily on your own platforms, but generally in this marketplace. Spencer, do you want to kick off?
Yeah, I'll just quickly start. I already mentioned the painful realization in the market. I think the thing we realize, and I think many of you realize, if you look back to the last 12, 15 months, is that we all have very, very good use cases, many very good use cases, but they don't stack up to really, really good business cases yet. And that's something that we need to change. We talked about it, or Armin talked about it on his panel. There are many things that are missing, a lot of puzzle pieces. It could be the cash on chain, but I think there are many other elements that are relevant for to really drive this evolution forward. But I think that use case to business case dynamic is super important and something that has been lacking, and we painfully realized.
Picking up on, as Thilo says, on a previous panel, one of the points that came out of that was our predictions and where we were last year compared to where we are this year now. I made somewhat of a bold assertion at the end of last year, saying that we would expect to see a lot of collaborations and a lot more integrations taking place within 12 months' time. I'm glad to say we're up and running with them, and as are others. It's wonderful to see. I think that's been the real change for me. Has been the attitude from the market participants and the solution providers to truly work together. And of course, that will only benefit all market participants. So I want to see more of that, further integrations from all of us.
I would say one thing. I think that we've mentioned vendor onboarding. I think the length of the sales cycle with many sell-side investment banks takes a great deal of time. There's a friction to adoption. I've also heard comments before, though, just to put those to one side, of which of these vendors do I need to onboard and to deal with? We all do largely different things. I don't think there's a great deal of overlap. It's not as if you look into a box of tools and think, oh my God, my house is on fire, the roof needs replacing, the washing machine's leaking, and I want one tool that's going to do all of that. We all offer these different services which are complementary. So I think that some institutions may just need that wrench. Other bigger institutions may need all of the above. But I think that if you're going to wait until any one of us are the size of Google or the tech giants, you probably wouldn't want a firm like that is supporting the financial market infrastructure. So think about the problems that you have today and think about what solutions are best for you to save you money, time, and effort and allow you to better interact with your clients.
Okay, anyone jump in?
Well, I think in terms of business case, what you said is, I want to repeat what I said at the panel, is really we're building this for a purpose, and this is where the business cases come out. So, and then the whole discussion about data models and documents and pushing a button here and there, it becomes something we just take for granted because we're looking at the future and the business cases where we want to create more people coming to the capital markets, distribute risk in a different way, bring down the cost of issuing bonds by 90% plus, and make it possible to issue several times a day if you want. All of this is what we're talking now is just the start and is laying the pipes. And we need to make sure that we lay fiber optic and not just some copper cables. I think that's really the change that we're seeing now.
If I may, I think the, excuse me, my main observation from this year is that, and this is no coincidence, this is entirely related to what's going on in the macroeconomic environment and the interest rate cycle, and what's going on with our friends in technology outside of the capital markets, but the wider tech world. The payback period for tech has shortened considerably. So in 2019, 2020, 2021, the boards of most of the large financial institutions would be instructing their teams that you need to do a high-profile digital trade because we need to be seen to be out there. And that was enough to motivate people to spend a lot of money and a lot of time on POC trades. That message is no longer coming down from the board, right? Because the world has changed. So all of us that are in the trenches building stuff, we have to prove that the investment that you put into adopting a particular piece of technology is going to pay back within a reasonable time frame. Now, I'm not going to quantify reasonable, but reasonable today is a lot shorter than it was a year ago. And I think that's the big shift that you're seeing this year versus last year.